I want to welcome everybody. We're going to kick this off. I'm Dan Stanhope, a leader in AAFCPAs Construction Practice. We're excited to host this webinar with ProNovos and provide them the opportunity to show you the solutions they've developed to streamline some of what we think are the most critical financial workflows. So for the next 30 minutes, we're going to spend time on two specific items, the WIP reporting and cash flow forecasting. So on the WIP, we see contractors put off creating a WIP until CPAs or bond agents ask for it because it can be time consuming and maybe not as high of priority as winning new work or getting existing work complete. However, without a monthly or at least a quarterly WIP adjustment, your financials can be significantly misleading. I'll give you two quick examples. It's always best practice to bill advance of your costs to help cash flow a project, but without a WIP % complete adjustment, your financials for that period could look significantly more profitable than they truly are. Or conversely, if you're carrying costs from unapproved change orders that you can't bill yet, or without a WIP adjustment, you could reflect a loss or a less profitable month in that case. So it's key to take time to make those adjustments on your WIP and for accurate reporting. And ProNovos can help automate some of that process to reduce time and effort. The second piece I think is important is cash flow forecasting. Contractors can fail or struggle in good and bad economies, and it always comes down to cash flow. The old saying, cash is king, is never more true than in the construction industry. In a good economy, rapid growth and an abundance of work can actually put strains on working capital as you continue to outlay cash for projects with labor and materials, while payment for your work might take 30, 60, or even 90 days to collect. And in bad times, contractors have a closer eye on cash, but there's still a big concern monitoring your overhead and making payments to keep those projects progressing. So, with that said, I'm going to turn it over to Bobby and Bruce from ProNovos and let them show you some of the solutions they've come up with that I think help these two critical areas.
Yeah, thanks for that, Daniel.
Yeah. Yep. Before we get into the product, I just want to give a quick background on me. As I am new to ProNovos, I'm definitely not new to construction. So I've got 17 years in construction, from everything from being a laborer all the way up to master electrician and superintendent to executive, and then now on the software side, and really providing solutions that I think can help everyone from the smaller contractor up to the very large contractor. And so with that being said, I will get into the product and kind of show you. I think we'll start in the WIP, Dan, since that was kind of what we started off with and one of the most important things. So let me get to share screen here.
And I'll like to add, WIP automation is, it seems like that's the biggest driver for a lot of contractors to turn to systems like ProNovos. I know that, Dan, based on your experience, most often your clients would probably do a WIP in Excel. Is that right?
Exactly. Yep.
Yeah, it's very hard to automate things in Excel. It can be done, but it's very hard. And Bobby, I'm very excited for you to start sharing your knowledge about ProNovos and the WIP and the way we do it.
Right. Yeah, well, exactly right. I mean, the WIP, if we did it for a while in Excel, and it can be a bear, especially as you grow and trying to get all that data from the different silos out of the accounting system and make it accurate. And and even something as simple as keystroke errors can cause big issues. The WIP, it could be argued that it's just as important as the P&L or as the balance sheet. It's one of the main things that an underwriter, from a surety standpoint or even from a lending standpoint, is going to look at, because it shows how you manage the projects and how well you're able to keep up with things. The great thing about on the ProNovos side and how we can really help is we can show all the KPIs right off the bat on the from everything from the revised contracts to what's earned and even the backlog. And I really like this project class breakdown over here to the right. When I was at the executive level and before we were doing ProNovos and we had Excel, I would have to spend sometimes a weekend, a month to really break down our billings by what we were doing on the project class side to show that, how well were we doing in public works, how well were we doing with aviation, so on and so forth. And this really is able to take that and show it to you and from an executive level, be able to save that, that hard-earned weekend time with your family. And switching gears now to the other side, on the executive level side, we're able to now track by the project managers how well they're doing, individually. And I think that's important, just as from a transparency standpoint.
Yeah, Bobby, I think that's really important. And it's something I do with my clients at the end of the year. I try to slice and dice the WIP by industry, by project manager, by job size, by maybe geography. But the whip sorts, it takes a long time. And right in here, it's just right there on the dashboard for you. It's pretty impressive.
Right. Yeah. Right. It's going to get synced, every day. And then as we go down, we can actually see what most people are used to seeing with the whips. We have a little, a new part over here to the left that we'll get to later on the upcoming project review. But, this kind of shows us the key data points, that a whip is really useful for. And you mentioned something early on the over/under billings. I think it's really important on the overbilling side. A little bit is good, so that way you're having someone else, finance it. You're not having to finance projects. But to just fully understand that too much going one way can, on the overbilling side, can start hindering you as the project progresses on, and you start seeing cash flow issues with that individual project if maybe you get a little bit too ahead early on. But the beauty of this too is being able to go from the WIP straight into the projected final cost, which is, like you were saying before, keeping your projected final cost updated. I would recommend it needs to be done at the minimum on a monthly basis, at the minimum. But really, if you can, weekly or daily, and I understand on some maybe daily doesn't make sense, but for sure on a weekly basis. So that way it keeps the company being able to be agile, right? And identify some potential issues to where it gives us time to try to mitigate them, or find issues where we had some pickup and then now that's profit. And like you were saying before, these are important, so that way you can identify that and say, okay, now we have a little bit more cash to deal with, or now we expect this project to do a little better than what we thought. Going back to this, what I really love about it is most project managers should be very, very familiar with doing updates based on a percentage complete basis. It's much easier for someone to go and say, I know that we're 30% complete, 20% complete, so on and so forth. That's how the billings are done on AIA schedule of values. And it's just easier for the mind to comprehend, as opposed to trying to get overly granular. And so that's what I really like about this, is that we can change the percents complete. We can make our adjustments based on a percent complete. But even on something like this, where if we think that, okay, this material, maybe we had $5,000 budgeted, but now it's only going to be $4,000, then my computer would work with me. The beauty of it is when we make that adjustment, we can see why. Was it better supplier pricing? Was it negotiated buyout? What was the reason for the change? And the reason I really like this is because the same thing, like you were talking about, trying to slice and dice that data. Once we can understand what we're really good at, maybe we're really good at underground, or maybe we're really good at, roofing, and then that can then start helping us win more projects as we go on, because we know that we can maybe get a little more aggressive at certain things, or what we found actually is we thought we were actually really good at underground, and actually turned out we were really bad at underground. Everybody liked it. Everybody wanted to be on the machine and dig. But when we actually looked at the productivity factors of it and the pricing, we actually were not very good at all. And it was this what we were able to kind of help show us on that we weren't actually that good at it. And then you're able to adjust that. So you're not chasing your tail on a productivity number or a profitability number that really was never going to be able to be hit.
Bobby, I have a question for you.
Supplier better pricing. Sure.
Yeah, and also just a quick housekeeping. If anyone has questions at all, please drop your questions in the Q&A. We will I'll monitor that and answer your questions. But my question for you is, we started with the WIP and then we segmented to or segue to the projected final cost.
Yep.
My question is, does this feed the WIP?
It does feed the WIP, and that so I was actually getting there. So thank you for the segue. That becomes the next great thing about it, is that we can make the project manager can make the adjustments. Once the adjustments are made, it then feeds into the WIP. So you're not having to make a forecast adjustment and then go and fill out the WIP on a separate siloed Excel spreadsheet. You can make the project adjustment based on what's actually real time happening in the field. And as soon as it syncs up, it immediately feeds the WIP instantaneously.
Got it.
Yeah, and again, I think that helps on a growing company. You know, there's so many moving parts that can happen on a growing company. Growing is probably one of the most expensive things that a company can go through, and so this helps give everyone that data, and to where, you know, there's not that hair on fire. You know, there's not always emergencies. This helps mitigate the emergencies, right? Any questions, Bruce? You want to go over any more on the WIP or?
No. I know that you talked about the WIP adjustment can be made from percent complete. It could be made with actual cost, the projected final cost, and the cost to complete. For anyone that is doing their projections by hours, I believe it does hours as well. Is that right, Brian?
Yep.
Bobby?
Yep.
Okay. And
Yep.
quantity.
And quantity by hours and by quantity. And there's a question in the Q&A, and it's where does this data that goes into the forecasting and WIP come from? That's a great question. So it actually pulls straight from the accounting system, from the ERP. It pulls in nightly, so that way your data, everything that's going in does not have to be re-entered into ProNovos. It's coming over as a single source input. I thought there was another one just now. Yeah. Okay. Going from this PFC, I do want to show one more. And so with, like we had on the budget adjustment, and then this is kind of getting away from the PFCs a little bit, but I think it's really important to see, like I was talking about on these adjustments. This is the project dashboard, and this will show all of those budget adjustments that we've been doing. It'll show the total adjustments that it was and the dollar value associated with it. And like I said, I think this is great when coming from a tracking, analyzing standpoint. And if it's something like, you know, miscodings, that's low-hanging fruit for us to be able to, you know, tighten things up and be more efficient.
So Bobby, green is favorable and red is unfavorable.
Yep. We made it to where it's very, very identifiable.
Sure.
Yep. To where green is something that's favorable, and then red being something that's negative. Yeah.
Right. And accumulating some of this information and getting it back to the estimating department, I think, is also important. Did we miss it on bid day, or did we miss it when we're actually in the field, so that they have more knowledge when they're pricing work?
Yeah, I mean that was one of the main points of discussion I'll call it all the time, was, you know, project management maybe saying, well, the estimate was a bust, and estimating saying project management mismanaged it. And so all this does is help give that level of transparency to where it can be seen objectively, right? That no, maybe it was an estimate, or maybe it was a mismanagement. And it's not to point any fingers at anybody, but just so that way the company can operate a little bit more efficiently. So let me get back to the main, and if there's no more WIP questions, I do want to get into the cash flow forecast, because like you said, Dan, cash is key. I mean, you know, the way I like to think of cash and cash flow is, you know, Michael Dell Computers, right? He equated it to where, if the profit and loss statement was your speedometer and you know how fast you're going and everyone focuses on the profit and loss, cash flow is the gas tank. And if there's no more gas in the engine, then that speedometer can't move, right? Another way to think about it is, if on paper we may show that we made a lot of money, but if there's no gas in the proverbial engine, then it doesn't really matter. And so I think the cash flow forecast becomes a very, very powerful tool. And we've taken it and now shown it in a graphical sense to where you can show your net cash flow to where it's a week over week or month over month. We can slide to adjust how we want to see it. And then as well as our cash balance and how our cash balance moves through. We can then scroll down. I'm going to come back up because there's something I do want to go through on the forecast, but we can then scroll down to see our different accounts and our line of credits, etc. But here's the 13-week, and I'm assuming that everyone's pretty familiar with the 13-week cash flow and how important it is on the inflows and the outflows. And this takes that same data from the accounting system on the outflows to where we know what the AP payables are and when they're due. The same with the inflows. And so the inflows on the collection side is kind of where I wanted to get to. What I think is great is that we can toggle on the average day to pay that maybe that project is at. And so if we're at a 58-day average, we can toggle on to where it'll automatically fill in down in our 13-week to then come up here to where we can start forecasting to say, hey, over here on the 28th, we're going to have a big, cash crunch here. We've got to either step up collections or we've got to tap the line of credit, et cetera. And I think this becomes a very, very important tool. Cash flow, it's a lot easier to address a problem if you know that problem's coming up, 8, 9, 10 weeks down the road, as opposed to Monday morning, oh no, we didn't realize we had this problem. And so I think this becomes a very, very powerful tool. Any questions on this one? Actually, Dan, I would like a little bit of feedback on, on are your clients, do you see them mainly using it in Excel and having to, I know for us, we had Excel and it was, our controller every day making the adjustments and, and we were 85 million top line. And so you can imagine that those are a lot of adjustments that have to get made in an Excel spreadsheet.
Oh yeah, you can have formula errors and everything, but yeah, I would say everybody's using some form of a Excel cash flow model. But so again, it's not dynamic. You can't easily say go from 58-day collection to 65 days, and what's that going to do to us? Factoring in the retainer, things like that. So this is much more fluid.
Yeah, and that's what I love about this. It's very fluid, exactly, and it's very intuitive in that it can show you those changes via the adjustments that even a project manager can make, from either the job review or on his end, where if he knows that on his billing side, hey, I talked to client X, it looks like, CFO is out, so we're going to be delayed a week on our checks. Now that's going to move it. As soon as he makes that adjustment, it immediately fills into here to where, he doesn't have to go to accounting or to controller or CFO and say, okay, like you said, okay, now go into the giant matrix of our 13-week and then move that, easily with notes and so on and so forth. I mean, I know our controller, like I said, she had notes everywhere, all over the place on all the different cells. So this, in my opinion, makes it a whole lot easier to navigate. And like I said, identify issues.
Right, and a lot of people's cash flow forecast looks like the bottom section where it's more of a grid, and I can see visually helps so much being able to see where that break-even line is or when you're going to dip into the line of credit, like you said. The visualization of it, I think, helps a lot.
Right, exactly, and most people are more visual people to be able to at a quick glance see, this is where we see issues happening, or the reverse. Maybe we're going to be in a very large, cash position, and maybe we go and, address whether it's line of credit or an investment or whatever it may be. Or, so that way you always have an idea, and you're not behind the 8 ball every single week, or worried about a keystroke error, because those happen constantly. We've got about a couple more minutes, but I'll kind of leave it open for Q&A, but I have a couple more things I want to go through. But so financial statements, I think, is important, because I know from an underwriting standpoint, and from whether it's surety or lending, a lot of these ratios were really important for us. And I'm assuming, Dan, that your clients may have the same, where same reporting requirements, and to where this can be done from we can change the time frame we want to look at it. We can change between if this is our monthly, quarterly, or annually ratios, and it does adhere to where we're not having to have a spreadsheet again that has to be updated by somebody. And for us, it was always the current and the working capital, and then current to total assets. And so this provides a very quick solution that's taking all the data that we already have and turning it into the same reporting requirements that may be required. And then there's some other metrics down here that aren't necessarily important to underwriting per se, but days in AR. I think days in AR is extremely important. Are we maintaining, or are we getting outside of what our either contractual obligation is to get paid on? And as a firm, how well are we doing? The same thing with days in AP. A key part of cash flow is not, to paying on time, but not paying necessarily too early. And so this kind of helps us, as well as, how often or how often is that AP staying there? Bruce, do you want to go into project review real quick before we run out of time?
So I think we should. So we talked about the WIP. There were some other things on the WIP that you mentioned, in terms of how the WIP is updated. It's updated from the projected final cost. So the project managers, they're the ones that are entering the projection, and it feeds the WIP. And then you talked about cash flow. Everyone knows the importance of forecasting your cash flow. However, there's this new element, and my background is I work with all the contractors behind the scenes. I'm a technology person. I'm always trying to understand, where can we provide the best benefit to our clients. And what we've learned is there's this process that everyone does. I'm sure that for everyone that's on the call, this is very familiar to you. It's a job review process. We call this project review. And there are two elements to this project review process that we found is very laborious, and it could be extremely time consuming. So the first part is getting your PMs to prepare for the job review. What Bobby is showing you now is essentially a checklist that all the PMs will go through when they're getting ready for the job review. The checklist consists of really 5 major categories. If I could get you to go back to the categories, Bobby, I love to just kind of talk about this, because we have spoken with small, mid, and large size contractors, and across the board, everyone agrees that they want the PMs to know what's going on with the financials. They want the PMs to know what's going on with their project forecast, the change orders, the billings, and the schedule. So if you are a general contractor, or if you are a specialty contractor, this is applicable. Now imagine if it takes your PM on their best days 2 hours to go through every project to make sure that they are on top of things. They could do this at ProNovos within 10 minutes. As Bobby was showing you just a moment, if you go through the financials, if you click on that section, Bobby, this has, and then click on reviewed. I know you've already reviewed it, but I kind of want to show how easy the process is. It's kind of interesting. I live, and so do you, Bob. You live in this world of financial key performance indicators. I know a lot of project managers probably don't look at this as often. And so there is a bit of an education process that goes along with this. However, I think it's a necessity, especially if you want your project managers to run their jobs as if they are the owners of the company. This is what I'm hearing most often. Hey, we want our project managers to know exactly what's going on with the jobs. So in this section, we go through the financials. Everything is up to date. And here's the key. When you see this data, or when the PMs, when they see this data, they choose either to add a narrative. Like, for instance, if your build to date is not where it needs to be, you can click on the plus sign that you see there in the left-hand side. Go up one, Bobby. Yeah, and then you just write a narrative. That, click the plus sign there. Come down one, Bobby. Yep, right there.
Which one is it?
Okay. Well, so you write a narrative, and then once you write the narrative, it goes to the executives. And basically you could always drill down, as Bobby is showing you. You could always see what is making up the number. But if I could get you to go back to the project review, Bobby, then you check I have reviewed it. What's so great about checking I have reviewed it is it shows accountability. They go through each section, financials, schedules, everything that is important to you. And when you're reviewing, when you being the executive of the company, you're ready to go through your project review.
First, you there?
Can you not hear me? You can hear me, Daniel?
I can hear you.
Okay, good. Yeah, all right. I think we may have lost Bobby. He looks like he's frozen. So I'll just end it by saying that as the executive, you can go through the projects that have been reviewed. You can adjust many things related to the projects that will impact the cash flow, that will impact your AR collections. So with ProNovos, this is our financial intelligence tool. This is why we have such a strong partnership with AAF. They understand, bringing their clients the best technology that's out there. And it looks like we have just a couple more minutes. So, and we also lost Bobby, but we can take a little time to answer any questions that you might have. And I'll also throw out, one of the questions we typically get is, what accounting systems do you connect to? So we connect to QuickBooks, we connect to Sage, 100, 300, Intact. If you're running a modern accounting system, then chances are we connect to those systems. So, and it's an easy lift. Basically, we have pre-built connectors, and they automatically pull over into ProNovos. Okay, so does ProNovos work with Excel imports and exports? The answer to that is yes. We work with Excel exports. It really depends on the kind of import that you're talking about. ProNovos touches just about every major area in your accounting system. So if it's just job cost imports, we can import that data, but you only get a certain view into your company. Again, we connect to the employee data, the payroll data, the contract, everything, so that you can get a 360-degree view into your business. Anything then in closing you want to add?
I don't think so. But again, just if you have questions, feel free to reach out to us after if you're still thinking about things. But I appreciate you guys taking the time to show these key workflow areas that I think are really important to contractors.
Yeah, absolutely. If anyone has questions, you can reach out to Dan, you can reach out to us directly, and I know that you'll probably get an email with our contact info. But I want to thank you all for your time, and I hope that you enjoy the rest of your week.